Hey people, I welcome you all to Caroline's Online Academy. We are in the process of understanding the various concepts associated with accounting for share capital using small numericals that we have created. As I told you, just trust the process. When you are doing the numericals, just try to understand what that numerical is trying to teach you. Don't think too far ahead of the 6 mark problem or the 4 mark problem that they ask in the examination and all. Okay, so that will automatically solve itself if you understand these small concept problems. We were done with one problem in which we understood the types of share capital, and after which I taught you the logic behind various accounts getting debited or credited with respect to various transactions that happen when we are issuing shares. Am I right? So now what we are going to do is we're going to solve a problem, basic problem, the basic transactions of issue of shares. Understood? So let's see. I have created a problem. All right. So let me read the problem out aloud for you to understand, and then we'll go ahead solving the problem. So basic issue of shares. So it's not complicated at all, but it's very important that you understand the basic issue of shares, the transactions involved in basic issue of shares, and the journal entries that are supposed to be passed for each transaction. Nivedita Limited issued 1 lakh shares, rupees 100 each, payable as follows. Application is rupees 25. Allotment, we are collecting 20. First call is rupees 20. And second call, we are collecting the remaining amount. The company received 1 lakh applications and allotted, which means the company invited the public to subscribe for 1 lakh shares and public subscribed to 1 lakh shares, exactly equal. And we gave up 1 lakh shares to all the applicants of all the 1 lakh shares. Now we need to pass a journal entry. So the first transaction, as I already taught you, is what is it, my dear children? The first transaction is receiving the application money. So when we receive the application money, as I already taught you, two accounts are getting affected. One is the bank account and the other is the equity share application account. Now, equity share application is what account, my dear children? Under modern approach, it is a liability account because the company has received the money from the applicants or shareholders, applicants who want to become shareholders. The company is either supposed to allot shares to them or return the money that it has received from, right? So equity share application, which in which you're receiving the money, is a liability account. And when it comes to traditional approach, equity share application is a personal account because it represents the applicants who have given money as application money to become shareholders of the company. All right. So bank, we are receiving money in the bank account. So bank is an asset. When we receive money, bank account increases. When asset increases, we go to debit it. Therefore, bank account will be debited. And equity share application, as I just told you, it's a liability account, and liability account will be credited when it's increasing. Earlier, we did not have any liability towards anyone. Once the applicants gave the money, we have incurred some liability, and that liability account will be credited. Understood, my dear children? So, how much is the amount that we are supposed to debit or credit here? That is the question that we have. Now, if you look at the question, it says that Nivedita Limited issued 1 lakh shares of rupees 100 each. Does that mean that we need to debit bank account and with 1 crore rupees and equity share application with 1 crore rupees? The answer would be no, because each applicant, along with his application, would only pay the application money called up by the company. And the company is calling up only 25 rupees per application. As you can see in the question, the company is calling up only 25 rupees per application. And therefore, when we are passing the journal entry for receiving application money, how much would the company have received? The company received 1 lakh applications. Given the question, the company received 1 lakh applications, right? So the company has received 1 lakh application, and each applicant had paid 25 rupees per application. What is the total amount of receipt that money that the company would have received? Will be 25 into 1 lakh, and that will be 25 lakhs. Okay, that is the amount of liability that the company has incurred also. Just one second. That should do it. And your being application on. I want to concentrate a lot on writing the correct narration and all. I believe anything that gives a hint of what has happened is enough as narration, but if you're looking for centum or something, I want you to write the narration as per the narration, just like the narration given in the books, just to be sure, just to be on the safe side. All right, so the first, we have accounted for the first transaction. The second transaction is what, my dear children, once you've received the application money, in case you've rejected any shares, then you got to refund the application money received from those applicants to the to those applicants. Okay. So that's what you need to do. But in this case, we received 1 lakh applications and we've allotted in full. We've not rejected any shares. In that case, so what happens? We're not refunding any money because we've allotted shares to all the applicants. So our second transaction would actually be allotment. Second event would actually be allotment. And in allotment, we have two transactions. The first is whatever application money that we had received now becomes share capital, because when they applied for the shares, they were only applicants, equity share applicants. They had applied for the shares. Okay. The moment we allot shares to them, they become shareholders of the company. We've given them shares, so they become shareholders of the company. And any money paid by the shareholders of the company for the owners of the company will become share capital. So the nature of liability here changes from equity share application to equity share capital. And therefore, equity share application, the liability called equity share application is reducing. So it will be debited, and equity share capital will be credited because it's an equity and that is increasing. And according to modern approach, if equity increases, you got to credit it. Okay. So being shares allotted, again, narration, I'm not putting a lot of efforts into it. How much money will I transfer? I received 25 lakh application. I have not rejected anything, which means all of them have become shareholders, and the entire 25 lakhs will be transferred by me. Understood or not, my dear children? To the share capital account. Understood or not, my dear children? Okay. So the entire 25 lakhs I will remove from equity share application account and keep it in equity share capital account as I allot the shares. Now, what is the second transaction when I'm allotting the shares? Apart from just transferring it from equity share application account to equity share capital, because that application money is not application money anymore, it has become capital, so I've transferred it. The moment I allot, I also will tell the shareholders, I'll call those jokers, hey, jokers, come here, come. I've allotted shares to you and it's time for you to pay the allotment money. So I'll tell them to pay the allotment money. All the jokers in the class will now come and pay me the allotment money. So first I have to account for me calling them and telling them I've allotted shares, so you pay me the money. I have to make the allotment money due. Understood? And I have the right to receive money from someone. It's an asset for me, and therefore equity share allotment, which represents the right that I have towards the shareholders to receive money, will be debited because an asset is increasing, therefore it will be debited. According to traditional approach, equity share allotment money is personal account. It represents the shareholders to whom shares have been allotted, therefore it's a personal account. And what they're going to pay me is, they're going to pay me as capital only, and therefore equity share capital, equity increases and that will be credited. So equity share allotment account debit to equity share capital. Now what will be the amount for this? The amount would be, my dear children, along with allotment, I'm calling them to pay 20 rupees per share. And therefore, I have 1 lakh shareholders who are supposed to pay. And therefore, it will be, I have 1 lakh shares on which the money is supposed to be received. So it will be 1 lakh into 20, and therefore 20 lakh rupees. So this is allotment money made due. I made the allotment money due. Now, once I have made the allotment money due, all the jokers will come and pay the money to me. Now, all of those jokers, and some joker might default also. Is there anyone who is defaulted in this question? This question, all the shareholders will pay them. No one has defaulted. Understood, my dear children? And therefore, I would have received the entire 20 lakh that I called during allotment. So now it's time for me to account for receiving allotment money. What would that be? When I receive money, money increases in my bank account, therefore bank account will be debited, and I'm receiving it against what? Against the right to receive money for allotment. Right is represented in the equity share allotment account. Once those jokers have paid me the money, it cannot be an asset anymore because they fulfill their duty of paying, and I have used my right to receive that money as I receive money from them. and therefore bank account and asset is increasing, it's debited, and equity share allotment asset decreases, and when asset decreases according to modern approach, you got to credit it, and therefore I credit it. Understood, my dear children? So allotment money received. Okay, now that I've received the allotment, what will I do? I'll wait for some time, and when it's time for me to make the first call, I'll call them, guys, it's time for you to pay the next installment, which is the first call. So I have to tell them to pay first call, and I'll pass journal entry in such a manner that I'll make that money due from the shareholders. Okay. So I'm making the first call due, and how much is first call, my dear children? First call is 20 rupees. So what will be my journal entry? Two accounts are affected. As I had already explained in the class before, the logic behind which all accounts are affected. If you have not watched that class, kindly go over and see it. So making equity share first call due. So equity share first call account will be debited because it's an asset, gives me the right to receive money from those jokers, and therefore asset increases and that will be credited. And equity also along with that increases. So equity share capital is an equity account or liability account, it increases and therefore it will be credited. Understood or not, my dear children? So being first call made due. So I'm making the first call due. I'm telling them to come and pay the first call money. How much? What is the amount that I'm supposed to debit and credit here? I have 1 lakh shares, and each shareholder, I mean for each share, I need to receive 20 rupees as first call. It's given the question that along with first call, I'm supposed to receive 20 rupees, right? So 1 lakh into 20, that will be 20 lakhs. So that's done. Now, once I've made the money due, what do those jokers do? The shareholders, they'll all come and pay me the first call money, right? So when they pay me the first call money, the company will, I here refers to the company, okay? I means a company. The company will receive the money, and therefore the bank account of the company increases. When bank account and asset increases, will be debited, and I'm receiving it against equity share first call. So that asset is reducing now that I have received the money from them. So I'll receive the money. As there are no defaulters, I would have received the entire 20 lakh rupees. If there are defaulters, if there are people who didn't pay the first call, then that would be mentioned in the question, and this entry would slightly change. But in this case, no defaulters are there. Everyone have paid the money. Am I right, my dear children? So equity share first call. See the equity share first call. And what am I supposed to do next? I'll wait for some more time, and I'll make the second call due. I'll tell all the shareholders, "Array, please listen up. It's time for you to pay the second call." So when I'm going to make the second call due, what will I do? I'll actually make the second call due in my books. So equity share second call account will be debited because that is an asset representing my right to receive equity share second call. I mean second call money from the shareholders, and equity share capital will be credited. Now, what is the amount that I'm supposed to receive? Let's look at the question. They've not given the amount in the question. Big problem, right? So let's solve that big problem. You see, along with the application, they've given 25 rupees. For allotment, they've given 20 rupees. And for first call, they've given 20 rupees. But for second call, they've told remaining. What is that remaining amount? What am I supposed to subtract? What to find out? The remaining amount. Understood, my dear children? So what I have to do here is the issue price of the share, which is 100 in this case. The issue price, as you know, where the limited issue 1 lakh shares of rupees 100 each, payable as follows. It's not issuing the shares at premium or discount or anything. So it's issuing for rupees 100. So I'm supposed to, in total, I'm supposed to receive 100 rupees from the shareholders. And I had received 25 rupees as application money, 20 rupees as allotment money, 20 rupees as first call. So totally I have received 65 rupees. So what is the amount remaining for me to be received? I need to receive 35 more rupees, and that 35 more rupees I'll receive in the second call, which is the final call as per the question. Whenever it's a final call, it's also nice to write as second and final call. Usually in questions, the final call comes with the word final. Okay. Second and final call, and remaining actually turns out to be 35 rupees per share, and I have 1 lakh shares, so the total amount of I'm supposed to make due would be 1 lakh into 35, which is 35 lakhs. So once I've made the second call due, what happens next? The shareholders will pay the money and I'm supposed to receive the money. Am I right? So whenever I receive the money, my bank account increases and I'll debit it and I'll credit the account or that represents the right against which I'm receiving the money. In this case, it is a equity share second call account. So equity share second call account will be credited and equity share second call received. Understood or not, my dear children? So this is your basic journal entry, basic issue of shares problem in which we pass the journal entries. It does not involve any complications whatsoever, like it does not have calls in arrears, calls in advance or anything. And we don't have any oversubscription, under subscription. All of those things we'll learn in the remaining classes, remaining videos, one after the other. I'll introduce those things to you. Now, in this case, in the basic transaction, basic issue of shares problem, what are the transactions we have? We have a receipt of application money for which we pass bank equity share applications. Then we have allotment of shares. While allotting shares, we first need to transfer the amount in equity share application account, equity share capital account. So that will be equity share application, equity share capital, the second entry, and then I need to make the allotment money due. Call the shareholders, come, pay the money. So I am calling them. So when I make it due, I debit an asset account called equity share allotment account and credit equity share capital account, which is a liability account, which is increasing because that asset is against my liability to pay them back when I close the company. Okay. And then the shareholders come and pay me, so that will be bank equity share allotment, and then I make the first call due, so that will be equity share first call equity share capital, and the shareholders pay me, that will be equity share capital. Sorry, first call bank account debit to equity share first call, and then I make the second call due. That will be equity share second call to equity share capital, and then the shareholders pay me. That will be bank account debit to equity share second call. The easiest of all, my dear children, but you need to have a proper understanding of this if you have to solve the further other problems that are ahead of us. Okay. Thank you so much. We'll meet you on the next video with the next sponsored problem. People take care.